Welcome to Share Talk, the only podcast where investors come first.
i3 Energy issued a positive RNS. The Liberator A2 well has been spud. The company has agreed to issue $5 million of equity to funders of i3's junior loan notes at a price of 35 pence per share to provide additional flexibility to extend the drilling programme, and the funding long-stop date by which the company was required to enter a reserve-based lending facility or to source alternative development financing has been extended from 6 December 19 to 30 April 2020. On the minus side, Lombard Odier continues to sell down, but once they're clear I see the share price moving higher. Overall, at this level, to me it's a buy, although always remember that in the oil business nothing is risk-free. Sound Energy issued a hollow-sounding RNS. The company has now entered into a non-binding heads of terms agreement with a privately owned UK-registered company and has granted this company an exclusivity period expiring on 14 February 2020. The announcement was not received well, and after the last Keep the Lights On placing a few months ago, the share price has now dropped under 5p, and the market capitalisation has dropped under 50 million. I remember receiving a huge amount of flack for questioning the merits of Sound Energy last year when it had a 450 million market cap. It was so obvious even then that it was dodgy, with its pompous behaviour and the pretence that the team were somehow leading experts. The rot has also spread through the other members of their so-called Holy Trinity, Energy and Coro Energy, all of which were marketed to the gullible in an almost show business manner, resulting in huge investor losses. I warned about them all the way down, and you can read what I said in the archives of Blogger. Back to Sound, we don't actually know who the private company is which is meant to be buying the Moroccan assets, or whether it even has any money. But one thing's for sure, they'll use this announcement to do another placing and keep paying their 6- and 7-figure salaries. Pantheon Resources issued an equally insincere announcement. Reading between the lines, it doesn't sound like they're going to be drilling this winter, and in reality, I'm not sure they're ever actually going to farm out leases which Halliburton publicly attach no value to at all. I love the line in the RNS in relation to the progress of the farm-out, where they say that they simply cannot discuss it, in which case why even bother issuing an announcement? Savannah Petroleum issued a 7 Energy transaction update. Final long-form documentation in relation to the 7 Energy Group financial restructuring has been agreed, and next up is a court hearing on 13 November, at which 7 Energy International Limited will request the appointment of administrators in order to effect the transfer of the 7 assets to group companies controlled by Savannah and AIIM. Currently trading around 26p, institutions financed this deal at 35p a share 2 years ago, and since then Savannah have had significant drilling success in Niger. It's one that I see trending up. Finally, Barron Oil noted the provisional award of the Timor-Leste offshore Chudich petroleum sharing contract to Sunder Gas. Barron is entitled to be issued a 33.3% shareholding in the intermediate parent company of Sunder Gas, and according to Executive Chairman Malcolm Butler, this has the potential to add significant value to Barron and its shareholders. Could this now be the new lease of life for Boyle? Moving forwards, news from all the other companies who made announcements last week will be covered in the Sunday blog, and I'll be back midweek with another podcast focused on whatever interesting looking news comes along in the meantime.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.